Foreign exchange matters. Stephen Rowles is an analyst at CFC Seymour. Stephen, very interested in the trend, which means that sovereign wealth funds like those in Asia and those in the Middle East are potentially looking for bargains in the US markets. Is this seen as a longer-term boost for the dollar or just a blip in what is otherwise a negative downtick?
Well, I think it's a bit of a blip, but I think what it's saying is that there is value in some of the U.S. financials, and I think we're going to see that continue here. But, yesterday we saw similar reports out of China going into Japan, which were somewhat discounted later in the day. So today I just think it's a one-day event, but let's look for stronger financials to perform as we head into 2008 here.
Stephen, more here. Dollar yen right now stands at 108.30, about thereabouts. We did have dollar for the most of the morning session below 108, around 107.60, around there. Where's the next downside? Where's the next support level for dollar yen?
Well, I think that we're going to continue to see this. Just looking at the S&P futures today, it looks like the U.S. market should rebound a little bit from yesterday. So looking at the Japanese yen, you just have to look at the proxy for global equities, and I think that we'll see a return to some riskier asset classes today, and look for a rebound in global equities. So look for the yen to fall a little bit against the U.S. dollar.
The federal presidents of Chicago and Philadelphia, Steve, are both speaking in the session ahead. Is there any federal response or indeed regulatory or indeed central bank response that you can think which is going to abate these moves we're seeing in the markets?
I think we'll continue to see what we've seen them been saying for quite some time for the past couple of weeks here, is that inflation will remain a concern. But I think by the end of the week, I don't think we'll see that, as I think that with the housing crisis is leading to some shelter costs coming down a little bit. So I think that the PCE data will be in line with the Fed target. So that should cement rate cuts on December 11th. But I don't foresee any change from the Fed statement. So look for continued concerns about some growth and concerns over inflation.
And Stephen, we do have a big EU-China summit happening this week with the European delegation trying to put some pressure on the Chinese to allow for faster appreciation of the renminbi. Our guest earlier, Stephen Golub, says he doesn't think they'll be able to make much headway. What is your take on what that might result in terms of faster yuan appreciation?
Well, I totally agree with that statement. I think that it will be a situation where the Chinese will be shaking their heads and saying that, yes, we do agree, but what will come out of their mouth will be no. So I think that China will continue to focus on their domestic economy and domestic currency by setting the appreciation at their own gradual pace. So I don't think Europe will have an impact on the overall appreciation. But it is good that they're talking. It's taking some pressure away from the U.S. to head up that campaign. So all in all, I think it is a good move, but it's just more verbal discussion. I don't think we'll see any reaction.
Stephen, thank you very much indeed for your time today. Stephen Rowles, analyst at CFC Seymour. Well, we're going to take a short break, but